Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
Happy ITAD everybody, International Technical Analyst Day, today the 9th of September 2025. Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any other related items on these, my charts. This is all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. The supports on this market continue to be the same as they have been since mid-May, and possibly, if you take out one aberration, since late April. They are the green short medium moving average, currently at 97.92, which the market has repeatedly pierced, including 2 weeks ago, but which has still shown the gradual angle of the move higher. Then there is the mauve medium moving average below the market, currently at 96.77, which held up the market as recently as mid-July and early August. You also have the bright red neckline extension, a little lower down, currently at 95.91 of the November 24 to February 25 reverse head and shoulders bottom. And further down, the gold long moving average, currently at 94.82. Added to all this, at the start of July, prices rose up into the overhead band of congestion between 97.50 to 99.95, an area I described 12 weeks ago as a gossamer area, even closing over it, but it closed only the once each time, once back in early July and then again last week, though prices are still testing up towards the top side of this band right now. In addition to this congestion area, we have another congestion zone below between 93.95 to 96.06, which contains the 50% Fibonacci line of the October 23 to May 24 move at 94.80. Prices since late June have yo-yo between the overhead 97.50, 95 to 99.95 congestion area and the 93.95 to 96.06 congestion zone below, though I do note with decreasing amplitude. Nevertheless, for good order's sake, I'll once again recap the three congestions which we have seen working our way through. The first was way below between 91.83 to 91.86 and is the weakest. The second is already mentioned area between 93.95 to 96.06, and the one we became clogged down within over April and May, and from which we have moved up and away from. The final one is one we are trying to work our way higher through, and so far we seem to have failed, though we are at the top end of it. It's between 97.50 to 99.95. Overall, we have been chewing our way up and down through these for quite some time now, but so far we've not managed to break out of them, not just yet. Now further up we have a fairly free zone up to the March high at 10.164. This high is a function of the 2011 high that is above, the 2011 high that's above at 10.190. So we can in effect regard them as one congestion zone between 10.164 and 10.190, and that's the next one on top. LME 3-month aluminium. As I've stated here many times, there are a number of patterns here, one within another, all happening at the same time and all affecting the market in their own way. And I thought for the last few weeks that the picture might be starting to get clearer, but looking again and I see it's becoming murky once more. Of all the features, by far the most consistent one has been and still is the bright red shallowy bullish shift pitchfork for the mid-December 23 to late July 24 move. In March and April, moved down below the overhead bright red middle time, currently 2700, and down towards the bright red lower time below, currently 2390, where price is held and will since move back up, closer once more to the overhead middle time. Nearer and below right now, we have the support of the flatlining gold long moving average, currently at 25.66. Now the gold long moving average is in a small congestion band between 25.63 to 25.81. Interestingly, the rising green short medium moving average, currently at 26.04, which in the past really didn't look that great, has risen enough to initially reinforce the gold long moving average, but now seems to be starting to become an immediate support of its own, on its own, if not necessarily a very good one. Further down is the mauve medium moving average, currently 25.44, which also doesn't look that great, though it is moving up and away from the interesting 50% Fibonacci line for 2025 at 25.18, another significant support. I suspect the next decent band of support further down is the one created back in May and early June between roughly 24.41 to 24.85, though I could be wrong on that one. Now looking overhead, we have congestion at 26.50, that's just short of the big old 50% Fibonacci line of the 2008 to 2022 move, and that's at 26.75. Now, separate to this, we also had a mid-April to mid-August dark blue bull channel, currently 26.59 to 28.66. The lower trend line looked solid enough a few weeks ago, however, prices managed to punch down through it and close below the lower bull channel line, and the market is now establishing itself below it. I'll likely downgrade this support, or resistance if you like, next time. I said 3 weeks ago how all this action created the opportunity for two patterns in a relatively short amount of time. The first was to regard the action throughout August as a possible small double top with a final potential below the mauve medium moving average. I did not set targets for this back then, as it was not confirmed. Since then we've had a move lower below the neckline for the double top, but it was short-lived and at most only came close to the primary target and nowhere near the secondary target. Thus, this pattern, though created, has not fulfilled all its opportunities on the downside. Secondly, was to look at the whole late June to date action as a possible complex head and shoulders top, with even further implications below than the possible double top. Likewise, in this case, it was 2 weeks ago, too early to talk about targets below, but I did add, and I quote, I would suggest looking at the flatlining gold long moving average as a proxy for the neckline until a proper one is established with all the implications such a move lower may have, thus caution on the downside, end of quote. Well, we have not lived up to the opportunity below, and I retired this pattern idea last week. That just leaves us with a possible sideways move, a rectangle if you will, from about late June to date, with the core support being around the gold long moving average zone below on a closing basis. And the as yet untested resistance overhead is, at least since March, untested up around the 50% Fibonacci line at 26.75. So we're looking gold long moving average zone below and the untested resistance, the 50% Fibonacci line at 26.75 overhead. LME 3-month lead. A mid-April bull channel saw the market breach on the downside 8 weeks ago, then seemingly repaired only to finally break lower 6 weeks ago. The lower trend line was originally seen by me as part of an ascending triangle pattern between May and June, but it developed into a mid-April to late July bump and run reversal top pattern, as well as part of a not finished bull channel. Going to the bump and run reversal top pattern, as I said 6 weeks ago, and I quote, if this pattern decides to follow through on the downside, then we'll have a primary target X down in the 1964 zone, just above the bright red extension to the August 20 to December 2024 head and shoulders neckline, and a secondary harder to reach target X1 down at 1916, coincident with the low of January this year, end of quote. Now the second concerted attempt lower in early August traveled further down than the one in mid-July and reached the big bright red neckline, currently at 1959 of the August to December 2024 head and shoulders pattern. And in the process of tripping lower, the primary target X at 1964 was reached. But that was all, as prices have since then moved back up, hesitating around the various moving averages and importantly making lower highs and messing with the previously highlighted congestion between 2001 and 2003. Looking further up, we have congestion between 2036 to 2039, including the January 2021 high at 2039, and then at 2060, which was breached, but which eroded on its own, eroded the bullishness enough that we formed a horn top back in early July. Now there's one further feature, and that is the exit pattern from that bump and run reversal pattern. It was made with a mid-July to late September dark blue descending wedge pattern, currently 1931 to 1963. Now this pattern looked like it was becoming established last week, though it crucially did not have the full 5+ touches on both sides necessary to call it fulfilled. However, I've chosen for now to still keep it there, though with this and the way prices have strolled out of the top side of the pattern, I am inclined today not to set up potential targets above, not yet at least, though I have chosen to retire the previously mentioned secondary target X1 below at 1916. Now this contrary behavior continued as last week we made a weekly key reversal down, if only just. And this week, well, so far it's been barely a follow through low as we still sit within last week's range. What I can say is, for now, the green short medium moving average overhead at 20.06 is capping prices. The gold long moving average, currently at 19.93, is acting as an attractor. The mauve medium moving average, currently 19.92, is just messing around. And between the 50% Fibonacci line for 2025 at 1971, down to the bright red neckline, currently at 1959, we have support for what looks right now to be a sideways potential rectangle pattern. Finally, there is one additional point I'd like to make, and it's the point I've been making here since the start of this year and will continue to do so going forward. It has been and still is to me the most significant and important point of all. So at the end of December last year, we saw that 2024 had created here a very large and rare annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year in this metal in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.